Hello and welcome to this edition of the video market update from me, Nour, El-hammoury, in coordination with Orbex. In today's weekly video, as always, we will take a look at the most recent economic releases and events which had a notable impact on the markets, explain them, what does it mean for the market, and what does it mean for you as a daily trader. But the hot topic, of course, is the new president of the United States, who is finally in the Oval Office, and this is likely to be a new era of trading, whether the U.S. equities, the U.S. stock markets, and also the U.S. dollar. Donald Trump already moved the markets more than the Federal Reserve did over the past few weeks. Moreover, the first 100 days of his term is set to have some huge decisions, which are likely to have a notable impact also on the markets and the global economy. But one of the major things that he had to say also last week, which can be seen as a new bullet for the currency wars, when he said that the dollar is too strong and it's killing us. And this is exactly one of the main reasons behind the US dollar sell-off last week. So in the next few weeks, also traders are advised to be very cautious and very careful. As for the time being, at least, we don't know when and how he will deliver his decisions, whether through press conferences or maybe on Twitter. But who knows? But you're advised to be very careful. Another major event last week was the ECB decision. No change, as you know, but the euro continued to, or is still very strong and is stable above 1.07 levels, which keeps the possibility for another push higher, especially that the market is pricing in the tapering process, or the start of the tapering, from now on until at least April, if the ECB decides to start the tapering in April, as he promised before, or as Mario Draghi promised in the past two press conferences. Therefore, I don't think so for the time being that shorting the euro is a good idea during the week ahead. So those are the two events that I would like to talk about for now. But now let's have a look at the upcoming economic releases and the possible scenarios for the week ahead. Looking at the economic releases for this week, we have some sort of mixed economic releases during this week. However, the market might not react that much because we don't have that much influential economic figures throughout the week, but just a little bit out of them. Starting with Monday, and again, I would like to point out, if you need the economic calendar, you can always go to orbex.com, and then you can trade from the trading tools. You can select the economic calendar. We still have also more tools that you can use. But going back to the video again, beginning on Monday, we have just few economic releases throughout the day. Beginning with the industrial activities in Japan, which basically has no expectation for the whole day or for tomorrow. The consensus, the leading economic index, the coincident also index in Japan. But maybe the most important number for tomorrow, or the report, which is going to be from the German monthly report, or the Bank of Germany. In addition to that, we have some economic figures from Canada and also China, in addition to the consumer confidence also in the Eurozone. But we don't think so that these kind of figures will have any kind of impact or notable impact on the market. But at the end of the day, don't forget that the Trump effect is likely to continue. Therefore, volatility will remain on the rise. On Tuesday, we'll be waiting for the manufacturing and the services PMIs data from all over Europe almost. We'll be waiting also, of course, the most important event is the EU membership court ruling, which will be also on that day. And I guess probably it's going to be 1:30 Abu Dhabi time, which is around like 9:30 GMT time in the morning, which is very important to watch out. And so far, I guess it's going to be in favor for the House of Representatives in the UK to vote for, or will be able to vote for the Brexit plan. So we're waiting for manufacturing and services PMI. In addition, also of course the PMI composite from France, Germany, the Eurozone also. We'll be waiting for all these numbers. In addition to that, some economic figures from the UK, public sector net borrowing, and in the US, more housing data figures will be released. In addition, also to flash manufacturing PMI. But the housing data, all the existing home sales that we will be waiting for on Tuesday. This might be also another positive data, despite the fact that the estimates are pointing lower by 0.5%. But the housing data for the past month showed a very solid growth. So I wouldn't be surprised if this surprised also to the upside. During Asia also will be just a little bit of economic figures also from Australia, Westpac leading index, which doesn't have like any kind of impact on the market, but also from Japan. the trade balance will be released, and the estimates points to a surplus of 0.22 trillion, almost $22 trillion. This is dominated in the yen, which is almost 22 trillion yen. Going forward also to Wednesday, it's going to be the inflation day for Australia, which is also very important and likely to have a major impact on the market, especially in Asia, because for the past few months we've seen a lot of economic data, a lot of inflation figures came in much better than expected all over the world, and this is again one of the reasons why gold and silver are still rising. Gold is rising by more than 5% since the beginning of the year. Silver is also added already more than 7%, so you need to watch out from the inflation pressure also even in Australia. Estimates are quite a little bit like 0.3% to 0.4% for CPI, 0.7 and 0.5, which is going to be some sort of stable, but at the same time the year over year is going to be one of the major numbers to watch, which is expected to go all the way to 1.8. So this is very important to watch for gold and also for silver. In addition to that, in Europe, we'll be waiting for the IFO expectations and the current assessment and the business climate, which also likely to have like a medium impact on the market on that day. Industrial sales, industrial orders also in Italy. Moreover, we will be waiting for some economic data also from the States. Probably the most important number for that day will be the EIA crude oil stocks exchange, or which is called the US crude oil inventories. The estimates are not there yet, but we'll be waiting for the API to publish their data over the next few days. During the same day, or during the Asian session, the Australian banks will be closed. There's a holiday there in observance of Australia Day, so there might be not that much volatility on that session as always anyway. But the inflation data from in New Zealand will be released also. Estimates are quite a little bit of a stabilization at 0.3% and 0.4%, but this is also another inflation data to watch out from. Going forward to Thursday, which is the same day, but beginning with Europe, we'll be waiting for some data also from Spain. Unemployment. In addition to that, we're waiting for the GDP numbers for the UK, which is also is likely to have more notable impact on the market, especially if it comes with another surprise, just like for the past 2 quarters, where the UK or the British economy showed a solid growth, or better than expected in growth. Retail sales in Italy, and then the US session is also full of economic figures, including jobless claims. We have the goods trade balance. We have the wholesale inventories. In addition to that, the new home sales, services PMI, and the CB leading index, and finally the natural gas also a storage change. And these are also likely to have a major to medium impact on the market. Going forward to the Asian session, which is on Friday, it's going to be very important again for Japan, because we'll be waiting for the inflation. Inflation is basically maybe the hot topic for the next few weeks to talk about, because inflation seems to be like going higher and faster than the central bank's expectation, which is at the end of the day it might be a very bad news for them. The final day of the week, which is Friday, we have a list of huge and a lot of economic figures, even whether in Japan, in China, a little bit of. Don't forget that we'll have the Chinese New Year's, which is before that we might see another intervention by the People's Bank of China to keep the liquidity, or to increase the liquidity in the banking sector or in the financial institutions. This is another day to watch on Friday. We'll be waiting for some exports and imports from Australia, producer prices, in addition to that, nationwide house price index in the UK, consumer spending in France, some of the data also will be in Europe, M3 money supply, but most likely those figures will not have that much impact on the market. As for the US, this will be also the major event for this week. Another major event for this week, which will be the GDP for the US. Estimates for the time being shows the advanced GDP shows that for slowing down toward 2.1%, which is the most important figure to watch out in here, but still above the average for the time being. But another one that you need to watch is called the core PCE price index, which is the inflation that the Federal Reserve is looking at. The estimates are also to rise a little bit, all the way to 106 to 107 for the quarter over quarter. This is very important also to watch, because another improvement above that level would be also another sign for the Federal Reserve to keep on raising rates in the next few few months. Mexican consumer sentiment is the last number that we will be watching. In addition, also for all traders, you might need to watch the Baker Hughes U.S. oil rig count. But the estimate for the consumer sentiment is expected to stay stable at 98.1. So these are the economic figures that we were watching throughout the week, and now let's have a look at the some of the products that we mentioned in the past few weeks. Last week, as I said before, the euro continued all the way up again, continued to rise further, and we broke above the 50-day moving average with a clear weekly close above that level. On Thursday, we had a quick test of that support, which is the 50-day moving average, and then all the way back up and closed almost at the high 106.95. That's the closing price, which is still giving us more and more signs that the euro is still kind of possible to keep on rising in the next few days, especially for this week, and especially after such close. But we need to watch out from this channel also. Technical indicators are still pointing up, but at the same time, the stochastic shows that we need at least some sort of a slight retracement to the downside. So I guess buying the dip in the euro would be a good decision to make in the next, at least in the next few days, as long as the RSI stays above 50. As for the Japanese yen, and as we noted in the past few weeks also, after breaking below the 100-day moving average, we needed to test the 100-week moving average again. We tried at least the Japanese yen tried to break above that level. However, the weekly close is again well below that support, which should be watched very carefully because it is still some sort of indecision for the time. It's almost a doji for the past week. But most of the technical indicators are turning lower. I'm still favoring more downside in the Japanese yen, at least for the next few. We're talking about 112 and maybe 110 and 1945, which represents the 200 week moving average. This should be watched very careful. But I would still consider to short the yen with some stops above 117. Going forward also to the British pound, and after the press conference, or the rumors about the press conference from Theresa May, actually her comments were very strong, very positive. This is why the British pound also soared all the way on that day, which is a huge rally on that day. But however, we're still capped below the 50-day moving average. This is the second time. This might be a classical double top that we need to watch in the next few days. But as long as the 124.12, 124.20 holds, I guess there's still more downside would be seen. And also maybe if we just keep that trend all the way here, I guess those levels here where sellers are likely to appear. Technical indicators are not that really positive for the time being, and more likely the stochastic is still showing some sort of overbought. So I will still be a seller for the pound. Gold, as I said before, 50-day moving average was clear up, a clear break and a stabilization, and then we already continued to rise. Last week we almost touched the 1220, but we reached all the way back to 1207. However, the most important thing that we broke above the 1200 first, and also the 1194 above 50-day moving average. But we might see some sort of another retracement to the downside. But the most important thing that you have to be aware of, again, the inflation data. Inflation data are very important to watch in the next few weeks, as they are supporting the gold and supporting silver. Silver is overperforming also gold, and is also still above the 50-day moving average. So this is one of the major things that we need to watch in the next few days. Finally, looking at the S&P and the Dow Jones, there's no change where the U.S. equities are still trying to break a new records high, but without any chance. There might be a classical double top formation. And in addition to that, we've seen some sort of a one-day close below that support, which is very important. But however, the day when Donald Trump was sworn in, it's another day all the way back up, 19,818. We haven't seen the 20,000 yet. We're very close to it, but again, the technical indicators are pointing lower. However, it's pointing lower, and it's going down very quickly, which means that the pressure remains on the upside. VIX is still lower, so I still believe that with positive earnings, this might end up going almost to 20,000, but I still prefer to stand aside for the next few days. To see where we will be heading in the next few weeks. Because again, I don't think so that this is a very good buy for the time being. It's very high. We need to see at least a very good retracement to the downside before going further or before doing any rally. But the Trump rally is still in place, but I am not interested to buy it for the time being. So this is it actually for this week. Thank you for watching. Again, if you have any comments, if you have any anything that you would like to ask, you can leave a comment below this video on YouTube, and we will try to answer your question. You can follow us on many of the social media websites, Twitter, Facebook, and also YouTube. Thank you for watching, and I'll see you once again next week.